All right, guys, hope everyone is doing well. So this is one of the most important topics to understand regarding the order flow and prices respecting specific P durays, specific levels. For those of you who trade supply and demand zones, this is also relevant as well. This is simply how we identify fractals, and then we can trust specific trends based on the top-down vision, lower timeframes, execution timeframes, and so on. This is the foundation that it's really important to understand. So now what we have on the left, let's imagine that this is 4-hour or let's say 1-hour time frame, and what we have right here in the middle is let's say 15 minutes time frame or 10 minutes, something like that. Now, as I think all of you already know, is that inside of one simple expansion that is made of 1 or 2 or let's say 3 candles, what comes to the lower time frames like 1 hour, 4 hour, 2 hour and all of that, what comes to the 10 minutes, 15-minute time frame, we will have a full development right here, a full trend. So this is why I marked this into zones. This is the expansion zone right here. So this is what we would see on the lower time frames, and this is what we would see the fractals on even lower time frames, like 10 minutes, 15 minutes, even 30 minutes and stuff like that. We would see full developments, price eventually topping out, starting the pullback phase right here, this red zone, then reaching into specific levels, running some sell side liquidity, reaching into specific P durays, bottoming out, giving a shift in delivery, creating a tiny dealing range, and starting another trend to the upside. So now one of the most common questions that I always get is, when can I trust a specific P duray? How to know which P duray is going to hold, which P duray is going to be broken, and all of that stuff. So this whole topic that we are talking about here is one of the most important puzzle pieces to have in your arsenal to understand fully in order to know which P duray you can actually trust, and when it aligns with the time of the day, with your targets, with the overall vision, your daily bias and stuff like that. And then we have this whole alignment. This is when it's way easier to know when the execution timeframes / 15-minute, 10-minute timeframes, levels and P durays are going to hold, and then they will be broken. So now looking on the left, let's say this is 1 hour time frame, and let's say here we have 15-minute time frame. So notice that price runs some sell side liquidity, it creates this bottom right here, and it starts pushing to the upside. Again, remember this is 1 hour, and let's say this is, for example purposes, let's say this is 10-minute time frame. Price starts pushing higher, and in most cases when this type of pullback starts on the 10-minute time frame, price is looking overextended. It's been pushing higher. It runs some tiny buy side liquidity levels right here, runs into some tiny, let's say, fair value gap or stuff like that. Again, very often these type of reactions, pullbacks, are caused by something. Either price runs into round number that's overlapping, opposing bearish P duray, it runs some buy side liquidity, etc. Usually it's just a stacked area that causes a reaction after a one-sided move. When price switches now into this red zone right here, and when price starts pulling back lower, obviously what we can identify for ourselves is the dealing range right here. Price is retracing, and this is when we shift our focus back on this green zone right here, looking for bullish P durays, bullish levels. For supply demand traders, this is very look for your zones. Of course, we are focusing on discount price to trade below the equilibrium of this dealing range from this low to this high right here. When price does that and it reaches into our opposing bullish levels, bullish P durays right here, we can extend that because this low here is this low right here. So when this happens and price starts bottoming out on the 10-minute, obviously what we see is price running these small fractals and then reaching into this bullish P duray, bullish level. So now this is one of the key things that traders don't understand. When they see, let's say on the 10-minute time frame, price getting this clear trendy type of a vibe, price is very clearly trending to the upside, and let's say we are talking about this green zone right here, this is when they start focusing on this tiny delivery, on this tiny piece of the puzzle, thinking that okay, price is respecting bullish P duray. So when price now pulls back here, I will look for another bullish P duray to send the price to the upside again. But now one thing that they miss, one of the key puzzle pieces that they completely don't understand, is the fact that price moves in very clear and simple ways, which is impulse pullback, impulse pullback. And when we know that the impulse is about to end, this is then price usually will either run this last high or completely start pulling back from that area, fully crossing out the order flow that we saw before. So now what I'm talking about is that all of these bullish P durays that we had right here in these legs right here, price will completely take them out, use these structures as liquidity, reach into the higher time frames P duray right here. So if we are focusing on this 10-minute bullish delivery, 10-minute bullish order flow, it will use these lows eventually as liquidity when price starts forming this top right here, as mentioned, showing a reaction after one-sided run. And this is is when we simply don't want to focus on 10-minute PD race because the order flow is exhausted, this run is exhausted, prices start showing first signs of reaction. Sometimes it's S&P divergence, and sometimes it's literally everything. Price running some tiny buy-side liquidity pools, running into opposing PD race, you have SMT, etc. So this is when we stop focusing on 10-15-minute PD race. This is when we zoom out and see if we have some clear bullish levels, bullish PD race inside of the 1 hour development. And if you do have that, in most cases, what will happen? Price will completely break the 10-minute, 15-minute order flow, use these structures right here as liquidity, run into that 1 hour PD ray, and only then shift to the upside and continue pushing higher. There we will again start focusing on the 10-minute order flow again until price does exactly the same thing. It runs some buy-side liquidity into opposing PD rays, let's say fair value gap. Let's say we even have SMT between these structures as well, and price starts showing some tiny signs on, let's say, 1 minute, 2 minute, and it's about to pull back. And this is again when that happens, then we are not going to start focusing on this bullish PD ray here on the 10-minute time frame. What we will do, we will zoom out to 30-minute, 1 hour, 4 hour to see if we have clear PD rays now in this leg right here. And if we do have that, and let's say it's here, this is when we will use these lows as potential liquidity, not even looking to trade to the upside until price reaches and drops into that 1 hour PD ray and creates another tiny 10-minute dealing range. Then after taking out this high right here, then it rejects bullish PD ray, picks out this high again. This is when you can start looking for potential continuations if you're trading, let's say, towards a very clear magnet area, very clear bigger buy side liquidity pool. This is again when the order flow becomes very easy to read. Price starts shifting back into the 10-minute order flow. So in other words, what price does in order to continue pushing higher, understanding how fractal price action is, when we have 1 hour run, inside of these expansions, what we will have is obviously the whole structure right here. And we must understand what is happening on the downside right here, on this downside delivery, and what we have on the left side when price is running into it. And when we about to see potential pullback, this is when, after a one-sided expansion like this area right here, then price is nicely following this order flow. This is then you must understand that this is not going to take place all the time. And then price eventually starts pulling back after a clearly one-sided expansion. It will come a time when price will break this order flow that we see here. It will take out some lows. And this is not going to mean that price just gave a shift in delivery right here. This is absolutely not what I'm saying, because very clearly on the 1 hour, what we have is a healthy trend. But trust me, this will eventually happen on the 1 hour as well, because again, price is fractal, and this entire expansion to the upside, continuing higher, eventually seeing this very clear order flow right here on the 1 hour time frame, eventually these green zones will become smaller and smaller and smaller. Price will take out the high with less and less pips, and eventually what it will do is it will drop lower. And if this is 1 hour expansion, we would zoom out to 4 hour, 8 hour daily time frame to look if we have bullish beta race inside of this entire expansion right here. We would focus on that area to look for price to drop lower. We wouldn't treat this as complete shift in delivery, shift in a complete reversal type of a thing on the lower time frames. Price we would drop into that 4 hour, 8 hour or daily time frame bullish pedigree, and this is them that 1 hour bullish order flow would kick back in again, exactly as you saw right here. So now how do we use that on the execution time frames? So when we have a clear bottom formed, and what I'm talking about now is this type of situation. When price is bottoming out, let's say we are not fully sure what is happening, but after this first expansion right here, after this first green zone, price starts pushing lower, run some sell side liquidity into this 1 hour bullish pedigree. We are about to expect price to take off higher. This is when on the 10-minute, then price gives a shift in delivery. What we have right here, this expansion here, is a nice dealing range, is a nice zone that we will focus on the execution timeframes, like 1 minute, 2 minute, 5 minute, and so on. So after the shift in delivery, what we would take is take this low and this high, and on the execution timeframes, what we would see is an entire expansion, small tiny bullish order flow right here inside of this first leg right here. Then price, as mentioned, what it would do, it would pull back to the 10-minute bullish order block or bullish fair value gap or any other PGRA right here, breaking this execution time frame or the flow that we saw right here. It would run all that liquidity, and eventually right here it would bottom out, and this is when you would start looking for potential opportunities, either right here or ideally we would even talking about this low would wait a tiny fractal for price to take out the high, pull back, and continue pushing higher. And this is where we could be trusting this bullish order flow on the execution timeframes until eventually price again starts stopping out. But this time, what we would care about is not the 1 hour time frame, but the 10-minute and 15-minute time frame, the middle time frame type of a thing. There we would see this bigger pullback right here. And this bigger pullback on the execution time frames would come in a form like this, price dropping lower. Again, this wouldn't mean that we are seeing a shift in delivery. All that we are seeing is this 10-minute pullback right here. Price would pull back into this 10-minute, 15-minute bullish level, running some execution time frame liquidity, and then it would blast to the upside again, following the execution time frame or the full where we can add some potential scale-ins to your trade. So what we would see is another expansion right here until price starts looking too overextended. It runs some buy-side liquidity, then it gives another pullback. So this is then you must understand how fractal price is, and then eventually price on the 10 minutes starts looking too overextended. It runs some buy-side liquidity, runs into opposing bearish P raise. Let's see, we have SMT, maybe institutional level that it reaches also. This is from this point, then in most cases we will be out of our trades, because this is when you would see a bigger 1 hour type of a pullback, breaking all of these structures right here and pulling back now, not to the 10-minute time frame PD rate, but to the 1 hour, 4 hour time frame PD rate. So this is exactly then following the price action and the fractals. Then you understand where we are at on the map, what comes to the 4 hour, 1 hour zone, what comes to the 15-minute, 10-minute time frame zone, and what comes to the execution time frame zone, anything from 1 minute to 5 minutes. This is when it's a lot easier to understand. Then you must take partials when we are about to see a deeper pullback. Do not panic and think that price is about to completely reverse on you. And those deeper pullbacks are going to take place when you can trust execution time frame or the flow, when it's just a 15-minute, 10-minute pullback, and then it's a whole 1 hour, 4 hour type of a bigger pullback. And then obviously that is taking place right here. As day traders, scalp traders, we wouldn't want to hold through this whole bigger pullback right here. It would be okay holding through 15-minute, 10-minute pullbacks, but definitely not during the 1 hour, 4 hour time frame pullbacks. So to clear everything right here, 1 hour expansion, let's say, is right here. 10-minute expansion would be looking like this. And inside of every leg right here, what we would have on the execution time frames is a tiny price action, price giving clear order flow. Then the execution time frame order flow stops because 10-minute needs to pull back. It runs execution time frame liquidity. It runs into 10-minute bullish P risk. So this is exactly what we focus on the execution time frames as well. Price shifts and deliver on execution time frames, and this is when it switches into execution time frame order flow again. This is when you can start looking for scale-ins and so on. Of course, looking at what's happening on the left, what bearish P raise we had, etc., of when we can expect for another pullback to take place. Price starts pushing higher, following clear execution time frame or the flow. Sometimes those pullbacks are a little bit deeper, but eventually, again, price tops out right here and gives a deeper 10-minute time frame type of a pullback right here, and on the down continues pushing higher. And eventually, as mentioned, it tops out on the 1 hour, 10-minute execution time frames, and this is when it starts going for a deeper 1 hour time frame type of a pullback. This is when it completely breaks structures here on the 10-minute, uses liquidity, and obviously on the execution time frames, it looks like a massive complete shift in delivery, a shift in trend. And this is obviously when we can predict that a potential 1 hour, 4 hour pullback is coming. This is when we want to be out of our positions. So obviously we just barely touched the surface of this entire topic, but this is the overall foundation that it's really important to understand, to know when execution time frame order flow is about to stop, when 10 minutes, 15-minute order flow is about to stop, and 1 hour, 4 hour type of an order flow is about to be broken. Because a lot of traders jumped into trades when the order flow is already exhausted, and this applies to all time frames. Mostly, of course, the 15-minute, 10-minute, and execution time frames. Pending needs to read the price action and think that price is about to continue, but 10-minute and 15-minute is clearly signaling that a potential pullback is going to take place, and this is where we're about to see price on execution time frames start breaking structures and using them as liquidity. So this is obviously then we need to focus not on the execution time frame bullish P raise, but zoom out to that 10 minutes, 15-minute time frame and focus on that deeper pullback. And only after that, be looking for potential continuations to the upside again. So that is all I wanted to talk about today, because very often I get a lot of questions regarding this entire topic. So I hope it was helpful. I hope this will help you to better understand where you are on the map regarding the overall lower time frame execution time frame alignment. And we'll talk very soon. Take care, guys.